welcome to this new edition of Big Deal. Today we have two guests in our studios who are going to talk about the deal street and how it's going to unravel in the year 2017. Please welcome Sanjeev, Krishan, PwC and Vikas Khemani of Edelweiss. Gentlemen, so good to have you on the show. The first question to you, Vikas. Of course, we've seen a lot of turbulence in the equity markets, and 2016, by the end of it, had many different factors which impacted the equity markets, because of which there was quite a bit of volatility. How do you see the beginning of 2017 when it comes to various equity deals and market stability per se?
So I think in the last 2 years there has been significant uptick on the equity deals, especially in the IPO perspective. And I think 2016 was a good year. We had almost 26,000 crores of fundraising happening through IPO market. And I see this trend continuing in 2017. There's a lot of interest in Indian markets by the domestic as well as the international investors. And a robust secondary market is a very, very essential condition for IPO market. And that I see, continuing for next couple of years. And if you see the pipeline, as we are getting into 2017, there is a good pipeline. There are about, I think, 25, 26 IPOs already filed in, and I think we are doing 8 of them, and you will see more getting filed in. So I think, obviously, when you are ready, as and when market conditions permit you, people will hit the market, and some of the large ones are there. I mean, Bombay Stock Exchange will happen first in January. So I think you will see deals continuing in 2017. The extent and quantum and success will depend really on how robust secondary market is, but the pipeline is fairly strong.
All right, pipeline is looking strong. In fact, in the last couple of years also, we saw at least one blockbuster IPO in each of the years. We saw ICICI Pru as well as Indigo in 2015. But others were very small and not as needle moving, but they all put together make a sizable one. But BSE NSE could be in this particular year. So we'll keep an eye out for that one. But let me first bring in Sanjeev also into the discussion. Sanjeev, tell us, what are the factors to watch out for 2017 when it comes to the deal street? Because in 2016, clearly, we saw a fair bit of consolidation, and we did see M&A in pretty much all the sectors, which were, some of them were even surprises, like in media sector as well. So how do you see 2017? What are the factors to watch out for?
There are a number of reasons which might impact global investment flows into India. There have been change in governments in numerous Western countries. Some more are expected next year. The oil prices seem to be hardening a little bit. All that actually might impact the flows which come into India. At the same time, it is also true that India is standing out amongst the emerging markets in terms of its growth over the last couple of years. We still are trending at over 7% growth. The problem seems to be that there seems to be some local factors also which are making international investors think whether they should continue to invest in India or whether they should wait and watch. So basically 2017 I think is starting well, but I have to say it's a VUCA world, and foreign investors will possibly watch out for some of those factors as they decide to invest in India or otherwise.
All right, so many factors to watch out for foreign investors, and I'll take that with Vikas. But first, Sanjeev, are there enough deals in the pipeline when it comes to the various private equity deals, strategic deals that we have seen some of them happening in 2016? So when we begin 2017, is there enough to be watched out for?
I think we're definitely starting the year on a very, very positive note. I think a lot of secondary transactions from the private equity side are in the works, and you should see them until March. A lot of those are on account of the fact that the Mauritius-India treaty runs off in terms of tax waivers on 31st March. And also, I think there is enough momentum both from the corporate buyers as well as some amount of domestic consolidation which we have been noticing. So I think we're starting the year very, very well on account of a host of reasons. It's a question of how we trend after the first quarter. And I think that will be determined by some of the factors that we discussed earlier.
All right. So, Vikas, as Sanjeev mentioned about the foreign investors and what all they'll be watching out for, the tax issues and uncertainties around that is again beginning to emerge in the markets. There was a fair bit of nervousness. We are less than a month away from the union budget. What are we expecting, and what are the foreign clients of yours telling you?
So I think, obviously good part is that whatever tax changes would happen, they would be prospective, they won't be retrospective. So in that sense, that's a fairly good sign. I think as far as the foreigners' taxation is concerned, I think there is a plan laid out. I think, all the public market investors would get, taxed from 1st April 2017 in a staggered manner. The tax rate will go up, and so I think as long as there's a clarity and plan, I think that should be okay. And I don't think there is a mega change planned even in the budget from a taxation point of view for the investors. So I think broadly most of the uncertainties are behind, and this government is very clear that they want to bring some sort of order in that, and so I don't think on that part there are many sort of concerns at this point in time. Obviously, if they do some change, then there will be issues, but I don't think that is a really big point of worry. I think right now, mainly investors are looking for when growth is going to pick up, when the, and obviously we are in a complex global world, so there are a lot of global headwinds. So within the global headwinds, if you have to invest into emerging markets, especially in India, you need to have a lot of clarity about the growth forward, the risk factors, and those are being played, and hence you might see investors will respond to that depending on how that evolves.
Investing more into the developed markets compared to the emerging markets, that has been a theme that has really played out. But I also wanted to check with you, is there any big bang expectation from the union budget, especially after demonetization? There's a lot of talk that government really needs to salvage the situation. Yes. Is there any particular expectation that the market is also looking at?
So I think clearly, since there's an attack on black money and the demonetization move have been sort of pushed out, one expectation becomes very clear that how finance minister addresses his promise of reducing the overall corporate tax rate and individual tax rate. Apart from that, there are definitely that budget should be growth oriented. There should be a lot more focus on spending on investment side, spending on infrastructure building, and how they chalk out a plan or what kind of indications they give towards spending on the infrastructure or fiscal spending side. And lastly, I think what's going to be the approach towards GST, while I don't know whether he will make any statement in budget on GST, but next year it's going to be reality. So how sort of it gets dealt with, or what are the news around that would have an impact on that. But broadly, I think people are expecting this should be a growth oriented budget. There should be more there should be growth projected, at least in the tax collections, and unless government puts out a good picture that it is growth oriented, markets or investors won't get confidence that growth is really coming by. So that's going to be very essential.
All right, so it's a daunting task for the finance minister in this union budget, Vikas, and of course we enter this year with a lot of uncertainties, and GST has been also pushed at least till July, and we don't know if September is going to be the final rollout, but April is out of question. So let's see how that develops. But Sanjeev, I wanted to ask you about the other set of foreign investors, the private equity players. They were on a wait and watch mode in the last few months of 2016 because of the market volatility. Before that, they thought markets were overheated, so it was very difficult to meet the expectation. Therefore, the deals had really taken a beating. How do you see the present condition?
You would expect a lot more activity from the pension and sovereign wealth funds, who typically invest in late growth companies, businesses. You would also see them supporting, and some of the other larger private equity funds supporting the consolidation, the domestic consolidation, which is likely. And I also see some of the funds, actually in particular, trying to support Indian businesses who are trying to acquire businesses overseas, considering the commotion which seems to be in parts of Europe, and also on a sporadic basis assets in the US and elsewhere. So I think there is enough and more from the private equity standpoint. I think the story continues to hold good. As far as the late stage investments and the buyout activity goes, I think even on the early stage side, I think 2017 would be a better year than 2016. 2016, the early stage investments just fell apart, except on the technology side. I would expect 2017 to be a better year. It's really on the early growth side where we have seen that the IPO markets really seem to have taken over in 2016. I think we'll have to wait and watch as to how 2017 is. But clearly, on the late growth side and the early side, I'm very positive about private equity in 2017.
So actually one of the big concerns of 2016 has clearly been that IPOs have also raised money not for growth capital but most of the times to give an exit to an investor. So that has been also a theme. We'll see how that really develops in 2017. But gentlemen, stay on with us. We'll take a short break, but we'll come back and talk more about the trends that are going to really pick up on the deal street in 2017 and also the sectors which are going to be most active. Stay tuned to Big Time.